Okay, welcome back to another video. And in this video, we're going to actually talk about break of structure. So you now understand the open, high, low, and close of candles, and you also understand how to actually map your structure with wicks and candle body closes. And in this video, we're going to actually apply that to now what we will call a break of structure. And so break of structure is the most fundamental piece of smart money concepts, and we will learn that a break of structure actually indicates a market's likely direction to continue. So obviously, nothing is 100%, nothing will ever be 100%, but we can understand that with a break of structure, that price will usually likely retrace back into the leg that's created after the break of structure, and then eventually continue in the same direction as the break of structure. So let's go ahead and actually apply this to charts now and see exactly what that means and how to actually mark it. So looking back over our examples, this was from the last video. I'm just going to back up a little bit and go over here just to show you some different examples here. And so a break of structure, basically what it indicates is that smart money is aggressively buying and clearing out an old high. And when they actually break the structure and go long from here, it's a good indication that price is going to retrace back down. And at least it can, obviously, like in this example, it can wick this old low, but then likely what's usually very likely to happen is that it's going to continue in the same direction that price actually broke. So we can see here, price retraces, it then trades up, and at this candle, at this point in time, when this candle here actually closes above this old high and continues, that's actually a break of structure. So the minute that this candle closes above it, that's a break of structure. But in this specific example, price trades up a little bit further, ranges around, and retraces. And so that action right there, that pullback and then continuation with the candle closing above this high, is actually a break of structure. And so let's mark a few breaks of structure on the charts before we actually can get into the characteristics that we see after the break of structure, so that we can kind of avoid confusion. So we can see here, price does actually pull back from this low. And so if you're watching this chart live and you saw this price action printed here and then saw price continue back, you could mark this high, continue in a pullback. You could mark this low, I should say, as your point at the low in the market where you would watch for a break of structure. And so price pulls back. We can see a few wicks to show change of character, which we'll go over here in just a minute. And yeah, we can see price reverse, pull back, continue, pull back, continue. And then at this point in time, when the price candle actually, I guess technically between two different candles in this example, trades below the low and actually breaks below it, that in itself is a break of structure. And so let's zoom in here really quick and let's see that technically this is actually a really great example to continue from the candle mapping lesson previously, that technically this candle did not actually do anything until after this candle. However, you can see that there's really not a body that actually clearly closes across the line. But what the point is of this and this example is that this 1 minute candle here actually did open right at this low and then close below this old low here. So it opens at the low of this candle, which was just directly on this low, and then this 1 minute candle later actually does break below this old structure. So at that point in time, that's actually a break of structure because we have a pullback, continuation, and price closes below that old low. Okay, and you can see the same thing here. We have a little pause in price action and a pullback, and then a low that breaks structure. Okay, and we'll actually get into later videos how to actually, what breaks the structure matter and talk about swing structure. Right now, we're just getting the feel for like actually having breaks of structure in the market and marking those and the characteristics that happen after that. So this pullback right here, continuation, and price breaks right here. It then continues on a little bit lower, and we have a big swing pullback and continuation. And so at this point in time right here, going back from our candlestick mapping lesson, we can see that price just wicks above it. And so that wick right there is considered to be a liquidity grab, and price didn't actually close above it. And so we can see price continues on to trade lower, at which point in time, obviously has a really strong rally, pulls back, and then after coming back up into the range, which we'll go over here in a minute, price then reverses again and continues on down lower. So you can see this right here is another break of structure. This candle pierces, this body actually pierces this low back here and closes below it, which is then marked as a break of structure. Price trades back up into that zone, and you can then see a low printed in the market here. So if you're watching price action develop in this leg here, in this pullback, you would know that this is your low, and you would see that later on in time, price actually does trade below that and close below this low and then continue on down. And so this is actually another perfect example of scenarios that you're going to see in the marketplace. And so when we have if you're watching this price action develop live, and let's say, for example, you're watching this 1 minute candle and none of this other price action had developed, and all you saw was this wick right here, that's, again, we're not actually marking that as a break of structure. We would mark that or consider that just to be a wick until price actually trades through it later. So at this point in time, I realize that this is just two candles, but there are going to be times where you might see this wick and then price trades back up into this zone, and then substantial amount of time later trades through and breaks structure until we actually get that candle later on in time closing below it. It's not a break of structure. So you could have zones where this wick, or price is wicking that low, 3, 4, 5 times, and then way later on in price action, way over here, it's actually closing below that and breaking. So if you're, like I'm saying, if you're watching this price action develop, it didn't actually break until this candle right here closes below this old low. And so again, we can see a pullback into that newly created zone, and price then comes below it and just barely, it's obviously not super convincing, but price does actually close below that and cause a break of structure. It then retraces back up into this zone here, rallies back down, and it does attempt to break, well, actually just causes equal lows. So this, again, another great example, is none of this is actually a break of structure or a wick. You can see that this just created 3 equal lows in the market. And so later on in the liquidity concepts, we'll talk about why this is created and go a little bit more into depth on that. But at this point in the market, this was not actually a break of structure, nor was it a wick break, and price reversed, and it then comes back up and breaks structure going the other direction. You can see here. So we have this break of structure, we have a pullback into the zone, it continues down, it does not actually do anything, and then it wicks this high. So that's another break of structure where it then reverses and continues on that direction. And so let's just do a few more, and then we'll talk about the actual characteristics of what happens after a break of structure. So at this high, we can see price pulls back down and then continues back up. And at this point in time, price actually does break above that, causing a break of structure. And so if you're ever having any kind of confusion about wicks and candle body close, all you have to do is just take your trend line, and you can then hold control, and it will snap to this low, and you can then hold shift, and it will snap a perfectly straight line. And all you have to do is just drag that line until a candle trades through it and closes below it. So at this example right here, that would not be a break of structure, and one candle later, that is actually a break of structure. And so at this point in time, let's talk about the actual characteristics of what happens after a break of structure, so that you can start to begin to build on our expectation, or the expectational order flow of what's happening in the market. So after a break of structure, what is very likely is at some point in the future, price will trade back into that newly created zone to mitigate orders and to then continue the trend in the direction of the break of structure. So I realize that's a lot, and some points of that we're actually going to break down and build upon later on in the course. But essentially what you need to know is that after a break of structure, this is actually a really great example right here that we already went over. So after this pullback and continuation, price breaks structure. And so at that point in time, our new high and low in the market can be annotated by this trend line here at the high and this trend line here at the low. So this break of structure causes this to become our newly created range or our newly created leg or our newly created run, whatever term you want to refer to it as. I'll probably refer to it as many different terms throughout the course. It really doesn't matter what you call it. It just is a newly created range. And so I'll try to just stick to range from now on because that's usually the most commonly used term for this that I use. And so after this break of structure happens right here in the market, price at some point in time we know is very likely to retrade back into this zone here. And as we go through the course, we're going to build on the meanings and the understandings of all of these different zones and what everything means. But for right now, all you really need to know is that this break of structure, price trades lower, and then it retraces back up into this zone and then continues on is our expectation. In this example, it doesn't actually break this low, but we'll go over a few examples where that does happen. So again, after the break of structure, at some point in time, price is going to pull back into this zone, and our expectation is that the trend is going to continue. And so once we have the actual break of structure, we also then can understand that smart money is likely to continue that trend in that same direction as the break of structure after a pullback. And so sometimes, like you'll see in some of these examples, price breaks structure and then immediately pulls back. Other times it trades way lower and then pulls back. It just depends on what is happening and the momentum and a lot of the trading times as well, when there's peak volume or low volume. And so again, that's something we'll go over later on in the course, but let's talk about these little smaller pullbacks and breaks of structure here. So we can see at this point in time, price had pulled back up into this range. It gave us this little change of character and then pulled back and then continued to break structure at this candle here. So once we have this break of structure, what do we know? We know price is likely to trade back up into that zone, into that newly created range, which is this high and this low. Very likely to trade back up into this zone and then continue the trend in that direction, which it does, cause this break of structure. And what do we know after a break of structure? That price is likely to pull back and continue that trend, which it does again. So it breaks this low. What do we know after this break of structure? Price is likely at some point in the future. In this example, it barely trades lower and then it pulls back up into that zone. And we can expect that price will continue the trend in that direction until it doesn't, until we get a reversal, which we get at this point in time. And we'll break reversals and stuff later on down in the course. We really just want to focus on break of structure right now. And so this break of structure, we know that price is very likely going to trade back into this newly created range, which it does almost immediately before continuing the trend in that direction. And so we have a pullback and then a break of structure again, pullback, which trades way lower than this low and continues on to cause another break of structure. If we zoom out, it becomes a little bit more apparent that the trend has now reversed and we can see another break of structure here. And what happens after that break of structure, pullback, and we expect that price is going to continue until it doesn't, which it does start to pull back and rallies up again. And yeah, that's pretty much a break of structure. So let's go through just a few more just so you can understand the trend and the expectational order flow. So again, this is happening on any time frame, on any chart. It does not matter what instrument you're trading. It does not matter what time frame you are looking at, but we can see obviously this is skipping a little bit of price action, but we can see a pullback, continuation, break of structure. At some point in time, price is likely to trade back into this newly created zone, which can be marked by this high and this low. So we now have a newly created range right here that price can trade back into and continue that trend in the direction of that break of structure. Again, we have a break of structure right here. What do we know? We know that price is likely to trade back into this range at some point in time. and hopefully usually continue in that expectation of that newly created break of structure, or in other words, creating a new trend, which we can see price does trade below this low, does not make a new high, and then continues to break structure in this direction here. And so what we can do is use breaks of structure to actually map our new highs and new lows in any market. And so this is how we can then create higher highs, higher lows, lower highs in any market without using any kind of indicators. And we also know that with a break of structure, it's very likely, even without using anything else that we're going to talk about in this course, it's very likely that price is going to continue in the direction of that break of structure. So this is like the foundational steps, talking about candlesticks and a break of structure and mapping those candlesticks. This is like the foundation that we're going to build on and go from here in this course. So hopefully this video makes sense, and we'll see you in the next video.